Welcome back, everyone. My guest today is Colin Campbell, who built 12 companies worth over $1 billion. But the move that made him wasn't a win, it was losing 100 million. He says that 2026 is the best year in history to start a business. Welcome, Colin Campbell.
Well, thank you for having me on. Obviously, I love this topic. What's interesting about that statement, I made that statement in November of last year, and already this year, there's a 36% increase in business formation in the United States.
Why
It's
is,
been
why
one of
is
the
that?
hottest years. A lot of it can be attributed to AI. AI is definitely having it's definitely a game changer because now the solopreneur can operate a company with a dozen AI agents and do what, I say in this world, you're only limited to your imagination.
Yeah. And right now, what's the limit? Right? You speak a word, it builds a page, an app, a CRM, whatever you want. So what is the limit now?
No, I've been launching companies myself. We have run a little incubator here. Recently, we launched a new community, and using AI as part of that uh, tool set has allowed us to do so much more and produce so much more content, uh, and do it intelligently. I'm not suggesting that we use AI to create the content. In fact, I think that's actually a flawed strategy. Many people might get caught in the idea, oh, I'll have the AI write 20 articles for me and build a website. No, it's not going to work. What we do is we take real and raw data, and that usually comes from podcasts like this, or it comes from shows we do on Clubhouse, or comments in Facebook forums or LinkedIn forums. And we take those comments, we take this real information from real people, real recommendations, and we use AI to generate content. And it's been a very successful strategy.
Is the key difference giving it enough context?
Yeah. No, and it's got to be real humans behind the content, right? And don't think you're going to have AI write the content. AI is not going to pick up on AI. I call it real and raw. That's the best thing because I say raw because it's not cleaned content. I mean, I have 50 comments. I did one for Live at Sea about a week ago, and I said, should cats and dogs be allowed to live at sea? And I had over 61 comments on this one topic, and then I just simply cut and paste those topics and put them into the AI. But we're using AI in every one of our companies. We're using it in paw.com, for instance, to help manage logistics. And what we used to have like two or three full-time staff working on logistics, we're now looking at this saying, well, this is doing a better job managing our logistics, these AI agents using Claude, that we think that we might be able to reduce expenses. And if you know anything about e-commerce businesses, margins are very, very small, and every dollar matters. So you know, the key here for every entrepreneur when it comes to AI is having an AI mindset that you can
What's
do
that?
more things. It's having this just every time you run into a challenge or a question or a problem, you have an AI mindset. Let me give you an example of that. About 2 weeks ago, I said I'm going to try to create an app. I've never created an app in my life. I did take coding. One course in university was my worst course, and I ended up remember this was like 1992, right? And I'd go through the garbage bin to look for people's answers to try. I was horrible at it. Okay, I couldn't code if you tried it. So I used Claude Code, and I had this idea for a game that my friend was playing from Australia called Rummy Gummy. I know it's a funny name, but Rummy Gummy. And I said, okay,
Good name.
I'm gonna see if I can create an app because there's no app available to play Rummy Gummy with. So I took the spec, put it into the AI. And by the way, you can have the AI help create the spec too. And then I used Claude Code to create the app. Claude Code did it within probably about a half hour. And then it said, okay, now go load it up into Xcode. And I'm like, I don't know what they're talking about. I don't even know how to use Xcode on Mac. And so I loaded the app up, whatnot, and then I didn't know what to do. I took a screenshot and it said, Claude said, do this. And so I did it. And then I moved the code over and I got a big error message. And then I took a screenshot of that and I went back to Claude. Look, I got an error message. And he goes, okay, you got an error because you did this wrong. You have to set this structure up in this way. So I did it and I got an error message again. And then it said, oh,
Yes, that's a day in the life of a modern entrepreneur.
yeah, a total foreign to my brain to be able to create an app. And within about 2 hours, I actually had a working app. And I think that was pretty cool. And everyone can do this. Like, you are only limited to your imagination.
And the mindset is, okay, I'm a beginner. I don't know how to do it, and it's fine. I will ask dumb questions until we build it.
Correct. Yeah, but the mindset of most people is, I don't know how to do it, so I'm not going to do it.
Yeah.
Right? You know, I think I use a phrase in the book, start, scale, exit, repeat, that entrepreneurs are jack of all trades. But now with AI, we're masters of all trades, whether it's legal, whether it's coding, whether it's accounting, whether it's tax accounting, whatever it is, with marketing, we're masters of all trade now. We can do so much more. So I think that's the reason why we're seeing so many entrepreneurs launch businesses, you know, in the United States. And I haven't looked at numbers globally, but I can assume that we're seeing a lot more expansion in small businesses and startups going forward as well. The other thing about 2026, the reason why I'm optimistic is that interest rates will come down. That has not happened yet. Interest rates have been a drag on entrepreneurs, literally a choking businesses, especially the real estate industry. You can see it happening here in Fort Lauderdale, Florida. But when those interest rates do come down, and by the way, they may come down because of AI. You know, this is interesting. I do enjoy my economics, but AI is very deflationary, high productivity effects on the economy, and that results ultimately in lower interest rates. So I think it's a great year to launch a business.
You launched 12 companies. Is serial entrepreneurship a skill or a personality disorder?
Yeah, well, that's interesting. So there's two takes on that one. And I start the book off. I talk about, um, you know, we need to study serial entrepreneurs. And in the book, we interviewed over 200 people. And many of them were serial entrepreneurs. Some fairly well-known individuals, like the founder of Reebok, um, and the gentleman who wrote Crossing the Chasm Inside the Tornado, Jeffrey Moore. Uh, but there was a study that we quoted that your chances of success as a serial entrepreneur um, is actually double that as a first-time entrepreneur, and if all conditions are equal. And the reason is that it's simply about learning or gaining knowledge of the things you need to do to be able to be a successful entrepreneur. And when you learn that knowledge, and we have decoded that in the book, I think this book, it's called Start, Scale, Exit, Repeat. You can see that right there. I mean, this book has won 39 global awards. It has done probably the best job of any business book decoding what it takes to make a startup successful. And we learn those lessons from serial entrepreneurs and the things that they learn, and then we put that methodology into the book. We've also come out with two workbooks: a start workbook. So if you've not started a business before, or you're in start mode, I call it start mode. We have a start workbook, which includes, believe it or not, AI GPTs, custom GPTs to help you every step of the way work through the process of starting a business. And then we also created the Scale workbook, which just launched last week. And that Scale workbook is very comprehensive. We partnered with two other companies to put together the most advanced Scale workbook in the world. So if you're in Scale mode, call it start mode, Scale mode, and or even in exit mode. The Scale book's a really good book, to a workbook to really work through exercises to help your team get to a certain point of excellence. And we talk about everything from the story, how it changes in Scale, to the people, the type of people you need to hire, the type of money you need to fund your business, and how to get that money, and also the systems that you need to implement as you go into Scale mode.
Do you and your companies use AI to delegate the boring stuff or the creative stuff?
Both, both. Yeah. Look, I'm going to say this again, that I feel, you know, you can't rely 100% on AI, and And I say again in the book that you can never outsource the entrepreneur. I did that a few weeks ago. I did a newsletter. We have a monthly newsletter at startup.club. And in that newsletter, I did a test. I went on to AI and I said, AI, make me $1 million. And it wrote back and I have it set up to a certain setting, but it wrote back a snarky comment like, well, if I could make $1 million, I'd be rich. And that was the end of that conversation. So then I said to the AI, I have an idea for an app. I don't know how to build it. I don't know how to market it. But here's my idea. And then the AI responded by saying, okay, now you're talking. Now I can help you get to $1 million. Right. So there is this, we do have to interact with the AI, and the entrepreneurship's got to come from within us. One of the things I mentioned earlier is we just launched a new website this week called liveatsea.com. Okay, we run the Facebook community for Live at Sea. These are for people who actually want to live at sea on cruise condos. I know it's a very niche sort, but it's been a hobby of mine for a couple of years, and I'm very excited about this industry for a couple of reasons, and because I'm passionate about it. It's something that I work on. It doesn't even feel like work. So I do really believe in the concept of being passionate about an idea. I've had 3 King Charles Spaniels, and now I have a Cavapoo. Unfortunately, the 3 King Charles have gone, but I have a Cavapoo, and we run a company called paw.com, and I'm the largest shareholder in that company here in the incubator. And I love pets and I love dogs. It's a passion, because that passion gets you through those tough times. And when you begin to think about it, you can really help the business accelerate, because you become almost an expert in that area. I've almost become an expert in the concept of living at sea, and I've interviewed dozens of people, hundreds of people, and I run the largest Facebook group on that topic. So having a passion is absolutely critical, and I think and that gets you through those tough times, because it is a roller coaster. It is definitely a roller coaster. I will go back to what other thing you said earlier about the neurodiversity and how our entrepreneurs are neurodiverse. And that's actually the second last chapter in my book. We look at a particular study that was done by a professor at Berkeley University. And in that study, it shows that 49% of people who are entrepreneurs have some form of mental condition. And a few of these you might, I'm doing this by memory right now, but a few of these you might find interesting. I think it was 29% had ADHD. Okay, a very high percentage compared to the average population had ADHD. We had a large percentage had bipolar disorder, which surprised me. Another large percentage, it was like 12% or something, had addiction. Was a big problem for these high-performing entrepreneurs. So, neurodiversity is something that I believe can actually be something that can be beneficial for entrepreneurs. People who are ADHD have a way of just doing things that others don't. People who are bipolar can be more intensive in what they do. One of mine is I'm a bit of a gambler. I love to play blackjack, play a perfect game, and I love to buy domain names. I buy a lot of domain names, unfortunately. And every time I buy a domain name, I get like a hit. It's like, ooh, that felt really good. And I'm like so excited about this domain name. And the next day I'm buying another domain name. I just keep getting the hit over and over again. So I look at my own personality and say, well, is that this ability to gamble something that has helped me in my career? And one of my business partners says, I don't think I've ever met anyone in my life who gambles like you gamble. And yeah, you don't get it every time. You don't win every time in a game of blackjack. But the reality is I've won more times than I haven't won. And so maybe is that helping me in my career as a serial entrepreneur, and has that helped me do those 12 successful companies? I will say that there may have been 12 successful companies, but there were probably just as many failures. And one of the things I talk about in the book is that, we've got to mitigate losses and do it quickly. We even have in the first chapter what I call a stage gate. Stage gate is sit down before you start your business, or if you're just started your business, you say, I'm going to set a specific goal and hit that goal by this date. And we call our goals SMART goals: specific, measurable, attainable, relevant, and time bound. We're going to hit those goals. And if we don't hit those goals by that date, We're either going to pivot or kill it. But we've now set that, and we've allowed ourselves to give ourselves some room to be able to make mistakes within that date. But if we don't hit that date, we either pivot or kill it.
That's how you run your companies. Which one is the most exciting to run right now for you?
Well, I do love the e-commerce business with the dogs. I have passion around that. But the truth is, the most the businesses that I enjoy the most are recurring revenue digital platforms. And I talk about this in the book, chapter 2 and chapter 3, that the concept that you come up with should be scalable, and you should be able to build a defense, a moat around that concept. So my wife and I, we own a school here in Fort Lauderdale. Okay, let me tell you, it's very defensible, but very hard to scale. And she has 16 employees, 100 parents, and it's a challenge to run that school. She spends more work running that small business than I do running a company of 800 people, right? And why is that? Because it's a lot easier to run a bigger company because you have a lot more resources, better people around you. You surround yourself with great people. And when you pick an idea for your business, you can pick an idea that can have a high scalability index or a high defense moat. And we talk about that in the book. In the Start workbook, we actually have a GPT, just QR code. You can scan it. You can put your idea in. It'll give you an idea of the scalability and the defensibility of that idea. So let me give you a couple of examples. One of them, one of my favorite companies, I think maybe it was my favorite. I think I made more money from this one than any other company because I held on to more shares, was a company called .club Domains. This one we started in 2012. We won the rights to it. .club was an alternative to .com, .net, .org. And we sold domain names for $10 roughly to companies like GoDaddy and Namecheap and a lot of registrars around the world, including Chinese registrars. I went to China like 13 times. So it was a micro global brand, and we sold that company in 2021 to GoDaddy. And it was a phenomenal exit. And it was really just, we lost money for 6-7 years in a row because this was recurring revenue, lots of marketing dollars. And then it just switched. And all of a sudden, every year we had an extra $1 million of profit. And it was starting to really go. And that's when we sold it. We sold it for a phenomenal valuation just before the 2022 tech wreck.
Well
Yeah,
timed.
you said at the beginning, you said I lost 100 million. That probably defined me the most. And that would happen in 1999, 2000. Actually, it happened in 2000. We had a company, it was public, and it was worth over $1 billion. We had merged it with another company, and I did two things at the time. One is we agreed to a lockup for 18 months. And the second thing that happened was in March of 2000, a judge said they're going to break up Microsoft, and the NASDAQ fell from 5,000 to 4,000. That doesn't sound like, so we pulled our offering. So at the time, the company pulled the offering because they thought, we'll wait till the market bounces back. Well, if you know anything about that time, the NASDAQ went to just under 1,300. So can you imagine the NASDAQ today going from where it is today, 20,000 down to 4,000? That's what happened in the dot-com crash. I mean, that was pretty nasty. Unfortunately, there were not enough chairs to go around. The music stopped. We couldn't raise the money. Company became illiquid. And even though it had $80 million in revenue, the company filed for bankruptcy protection. And that $19 a share that I had, and I had owned about 13% of the company, ended up dropping to the date when I was able to legally sell it to 6 cents a share.
Wow.
And since that point, I always have two sayings. One is liquidity or control. Liquidity or control. When I sell a company, I want to make sure I have liquidity. We spent 10 years building this company in 10 weeks messing up the exit. And many, many entrepreneurs make the mistake of messing up the exits. But I know one thing is I want liquidity, which means I have total cash, or I have total control still. Either one of those two I want to have in place. And the second thing is that bad things do happen. .com crash did happen. The tech wreck of 2022 did happen. And it sort of formed me a little bit. And so we right after that failure, my brother and I, we launched a new company, a hosting company. It became the largest hosting company in the world for telecoms like AT&T, Vodafone, those kind of companies. and it became actually the fastest growing company in Canada. We were in Canada at the time, although I lived in the U.S., but it became the fastest growing company in Canada, number one fastest. It went public, and we sold it to a Fortune 500 company, and this time it was for all cash. But here's the interesting thing, Simon. We sold it a month before the Lehman crisis.
Again, great timing.
2021, we sold .club 6 months before the 2022 tech wreck, the crypto crash of 2022. And I talk about this a lot in the book, but you look for signs in the market. And one of the signs, I call it froth in the market. Do you remember $500,000 Bored Apes only a few years
Oh,
ago?
yeah. Yeah, yeah.
Do you remember GameStop? The GameStop stock went through the roof. Do you remember the number of SPACs, that special purpose acquisition companies that were going public in
We remember all of that. And right now, we might be in a frothy market, depending on who you ask.
Yeah, well, let's talk about that. So, what happened in that frothy market, the market shifted. Companies like e-commerce companies, which were being valued at like 1 times revenue, were now being, valued at 4 times earnings. And market valuations, like one company I was looking at on e-commerce, company called Bark, and they had a market cap, I think, around 4 billion, and now they're at 100 million. I mean, with massive drops in valuations. So about 2 years ago, when we launched Startup.club, which is a free startup resource, we decided to do a time to sell index for startups. And this is not a real estate index, so I want to be clear. This is really meant for startups. And we base the data on IPOs, the number of IPOs per year, or the number of listings in the US. And in that year, 2021, there were about 1,000 listings, which was a record high. 2022, it started to drop. 2023 was like 154. So you can see that the liquidity in the market had completely dried up. And the reason why we look at IPO data is because that's the top of the funnel. So everything falls down from IPO. Once you're at the IPO level, that feeds the private equity, venture capitalists. They then go out and buy companies, and it all rolls down. And so we put together this time to sell index where we look at the last 25 years of data, and we look at the trough to peak, and we've been reporting on it. The first number I came out with, it was in 2024. I think it was 6.8 out of 100. And then the market it really did start coming back, and you're now I'm calling it's a sentiment index, right? And you're now at about, I think it was 26.9 out of 100. So we are still in a very weak market. This is a buyer's market. This is not a seller's market. High interest rates are probably one of the reasons it's causing a lot of these issues that still exist today. But this is the time to build, not the time to sell. And I think it's a good idea to look at an impartial index like the time to sell index. If you just search on Google, time to sell index for startups, it'll come up right away. And we publish that every month, that index. So this is just another data point that you can use. Now, if you're an AI development company, you're obviously hot right now. So that, but generally, for the most part, the market's very weak, and it's not a good time to sell. So I'm not buying it's a total frothy market yet, but we're entering the period, the next probably 2 to 3 years. And then when nobody wants to sell, here's the problem with entrepreneurs and founders. When things go really, really well, they're like, oh, let's just, we did 40 million. One of our companies did $40 million. And the guy says, well, next year, the founder says, oh, we'll do $80 million or 60, 70 million. Why would we want to sell now? Right?
Yeah, you usually don't want to sell when
That's
the
right.
markets
Now,
are
then
good.
here's what happens when the markets crash. I have so many people I know, and some of them are companies I've invested in, and the founder's like, oh, we got to get out now. I got to get
And
out.
th-
I just want out. I just want out. And I'm like,
and
no,
that's the
wait a
wrong
minute.
time.
This isn't when you
Yes.
sell. It's the wrong time to sell. You got to build. You got to get lean and mean. You got to survive. You got to run a company. You got to be successful. And then
And when you need the
keeps
money,
going
it's
again.
usually where you don't get the money.
That's correct. Yeah. So it's for some reason our emotions lead us to make bad decisions. We do the exact opposite of what we should be doing. When things are good, we should be thinking about selling. When things are bad, we should be building and buying.
Yes. And as a business owner, you don't know these things unless you have experienced a few cycles and a few companies. You don't know that right now you don't want to take on a loan, but that's exactly the moment when you should take it because you don't need it. And now it's the perfect, you get the right rates and the right negotiation setting to do this. And later on, when you need the money, you won't get it.
Yeah, or later on when you need the money, the interest rates go up, and all of a sudden now you're paying, like we had one company, we had a $3 million loan, and we were paying 3% through a government program, and 3 years ago it went up to 9%. So that's killing the company. It's killing the profits in the company. All the profits are being used to pay the loan shark, the government, the U.S. government. Um, and that loan, when you try to renew it in a high interest rate environments, it's very difficult to do that. And in fact, they weren't able to do it. And I had to step in and inject a lot of money into that company to save it. Um, and I'm fortunate that I was able to do so, and I had the money to do so. But most entrepreneurs don't. And good companies, this was a profitable company, could have went bankrupt if it didn't have the ability to loan or borrow the money. So those examples exist. That's correct. You have to think about uh, connecting with the banks when you're strong, not when you're weak.
So it's time to build. And you are building a community of founders. Tell us about your community.
Startup.club is another passion of mine. We started it about really 4 years ago. Um, it was started because of Clubhouse originally. Clubhouse was this app. I don't know if you ever heard of Clubhouse, but I mean, it was
Sure.
very big at the time.
It was
We
fun.
got almost 1 million members in our club. We are the largest club on a Clubhouse called Startup Club. And then about 3 years ago, they started messing with the app, and they did a lot of horrible things to the app, to be quite frank. We still run shows there today. Every Friday at 2 o'clock Eastern, we run a show. Um, Same title of the book: Start, Scale, Exit, Repeat: Serial Entrepreneur Secrets Revealed. And we get about 500 people who watch us live and on replay. And then what we do is we repurpose that content, and we create an article that um, it gets the front page of Google. So right now, it's every article we write on Startup Club gets the front page of Google, and and it has a pretty big impact from that perspective for the content. And we use
Did you
AI to help
change how you
sell.
write those articles to be found by AI, or is it the same structure?
No, there's a few little tricks, but here's the key. The key is it's real and raw data. It's real and raw. This podcast, like you take the one we're doing today, we could take the transcript, run it through AI, and say, okay, lessons learned from Colin C. Campbell: Start, Scale, Exit, Repeat, or 10 lessons learned, and the AI will pull that out. Now I go in, I don't just leave it with the AI, but all this stuff is real and raw. This is stuff we're doing right now. I'm not an AI right now. You think I'm an AI? Am I? I'm a human.
I,
But
I
this is
assume you're
human
a
content.
human. You look human to
So if you
me.
have real, I call it, if you have real and raw content, you can take the transcript from this particular podcast. And if you want, we can run an experiment. We'll post it on Startup Club, and it will get the front page of Google for whatever term we're trying to fight for. But we can do that, and that's the key. It's real and raw. But what I do is I don't just have the AI write it. Then I do spend an hour on it afterwards, personalizing it, adding my own thoughts, doing intro, outro, those kind of things. But generally, the heavy lifting is being done now by AI. So I call it amplification of content. That's just one way of using AI to help to do it. Obviously, we're hitting it because we're getting the front page of Google. I do write for Entrepreneur Magazine, and I write for Forbes Magazine, and I'm not allowed to use AI in any way. So I have a human editors, 3 human editors that go through my stuff. Sometimes I don't even recognize my article by the time it gets to the other side. But that being said, I think there's a way you can use AI as long as it's real and raw data.
I love this. And what's next for you? What are excites you looking forward?
I'm very big on, and I talk about this in chapter 3 of the book, paradigm shifts. I had the opportunity to interview Jeffrey Moore, who wrote Crossing the Chasm. As an entrepreneur in the last 25 years, every business I've done that's been very successful has caught a new wave. And the reason for that is the big companies are fearful, and they don't tend to take the risk that entrepreneurs would take. So we often see examples of this in history. If you look at the top 10 crypto companies in the world, every one of them was started, except for one, I believe, was started in the last 10 years, okay, or last 12 years. Um, where's Goldman Sachs? Where's JP Morgan? Where's Citibank? Where are all these companies that should be in that space? No, they were all startups that did it. There was a huge shift with Bitcoin, with cryptocurrency, and these incumbents missed that opportunity. We see this happening over and over again in history. I mentioned earlier this concept of living at sea, and you're like, wait, it sounds a bit weird, these cruise condos at sea. There's only 2 ships right now out on the ocean where people can actually live on them. But the reason why I stepped into it about 18 months ago was I was on a Royal Caribbean ship, and I was using the internet, Starlink, and I actually was able to do a podcast, and I was able to do Zoom calls, and I was in the North Atlantic Sea. And I thought to myself, I said, that's a paradigm shift. That's going to change the world, because you don't need to be tethered to land anymore. You could literally have a condo at sea, and so I started the Facebook.
What's a condo at sea?
It's like a cruise ship room or a suite, and you buy it. You buy it
Permanently.
And you could live permanently at sea. And if you don't want to be there all the time, you can rent it out when you're not there. And it's a new space, a new area, and I like it because I like to catch those waves. I like to find new products or services. Now, there's no bigger wave in the world right now than AI. I will admit this. This AI will mint more millionaires than any other technological shift in history. I have no doubt. It is transformative. And we're going to probably see the first solo billionaire in the next couple of years.
But will it be AI, or will it be a normal business that's accelerated by AI?
So you have benefit. It can benefit both companies. You can take a traditional company like Paw.com that does e-commerce products that uses AI in its daily business to become more efficient. Totally agree with that. But you can also use AI to help transform what you're trying to do with agents and other techniques. I'm using it, as I said, to launch this community at Live at Sea. There's no way I could have launched this community at Live at Sea without AI. There's no way I could write an app, a game app, without AI. There's no way these things could have happened without AI. And because I have that, I'm able to do so much more at a such higher level of productivity and deliver and build value. Obviously my play with the Live at Sea here is not only do I have the Facebook community, but I also have we just launched the website, liveatsea.com, and you can learn about living at sea. But the next step is cruisecondos.com. You can get my domain name thing here, right? I'm always buying these domain names.
Who loves living at sea? I guess it's people who either don't have kids or the kids are already grown up.
There are some who kids are on board on some of these ships. And imagine that, like growing up instead of geography, seeing it on an atlas or whatever, but actually seeing it in person and traveling the world. It's a new space. My point about this is there are these paradigm shifts, and I go into detail about these paradigm shifts in the book. I even come up with a list of about 50 of them that are occurring, everything from CRISPR to like I said, the Starlink, the high-speed internet, and all these changes that are happening in the world are opportunities for entrepreneurs, because the big guys don't grab them quickly. They tend to do what's worked in the past. When you're in a big corporation, risk is not rewarded necessarily. It's a difficult culture to create within Fortune 500 companies. I'll be quite frank. Whereas an entrepreneur, a little bit of AI, spend $20 a month for it. I spend probably about $1,000 a month now on AI codes and products and Cloud Code and Teams and Murica and all the different apps from videos and music and everything. I surround myself with it. That's one of the techniques I use. I just surround myself with it, everything. I'm using it constantly. And I have an idea, and I'm going to use AI to help me make $1 million from that idea.
And it says, now we're talking, so you're on it. You're on it. Thank you so much, Colin, for being on the show, sharing your wisdom, your book with us. Where can people find you?
Yeah, just go to Amazon.com and you can buy the book Start, Scale, Exit, Repeat. Also, go to startup.club and sign up to our email newsletter. It's free. It has the time to sell index. And every month we do a masterclass on one topic, and it is an intensive email, let me tell you. But we have many great articles there. Everything's free on startup.club. Or come join us on our show at Clubhouse, Fridays at 2 o'clock, Startup Club.
Colin Campbell, everyone. Thank you. Keep rolling, man.